Welcome to an update to the Federal Milk Marketing Order 33. This is Dr. Lawrence Jones, and I'm recording this midday on August the 13th. And I would really like to thank Nobis Agri Science for sponsoring this podcast. I know it's been a while since I've gotten you a report, and part of the problem is that every time I think I understand what's going on with the market, it does something really strange. And for me, it's really hard to put together a podcast where I'm acting like I know what's going on when I don't. So anyway, this is the July contract, and so we were down here in the 17s, clear up here in the 20s, back here in the 16s, and we finally finished up at 1732. And so I did actually have a program prepared for you last month that I never did send because, like I say, I was just too confused. Now, out of that, I decided to take a new approach to what I'm going to present to you. And so what I'm going to basically start is, what is your milk check going to look like here in July that you should be getting here in the next couple of days, and how did that compare to June? Now, the milk check is all going to be based off the statistical uniform price, and it's going to be based on prices in basically Cleveland, Ohio. So you're going to have a location adjustment a little bit off of that. But anyway, for July, it looks like prices are going to be down about 8 cents. You should have a blend price of around 21.65. Now, this does not include any of the co-op premiums as well as the co-op deductions like hauling. And last month would have been closer to 21.73. I did put in the actual components for the region, and so yours may be a little bit off of this. But what I thought I would do is just go through this milk check and tell you how it changed and kind of what's going on here. And we just kind of compare the overall big picture. Statistical uniform price is 3.5 fat. So again, this is not exactly what you're getting paid on, but overall, it's going to track it pretty close. And we don't have too bad of numbers. There was a bit of a higher number here in 2022 and a little bit of a bigger number in the end of 2024. But overall, it's up there with some of the better ones. Let's kind of start at the top. Fat prices actually increased. We went from 273 up to 284, but your fat percentages actually decreased a little bit. Happens this time of the year with the heat. Last month you were 416. This month you're 408. So we look at these fat prices. Again, our low was back here in March. They've been kind of coming up here, but right now butter is under significant pressure, and so these fat prices are going to fall back down here. And this was done before the spot market today, and again, the butter was under pressure again, way off of the high that we had back here a year ago at 361. And you guys did increase fat year over year, so we're 408 a year ago, you were 401, and it's just this long-term trend of the bottoms coming up as well as the tops coming up. So again, a lot more fat than a year ago, but seasonally coming down. So protein price and protein percentages both decreased. We went from a 253 protein price down to $1.87, so that was a fairly significant reduction, and percentage went from 3.2 down to 3.16. So again, significant reduction. Last month we had about $8.10. This month we have $5.92. So that's $2.18 less a hundredweight just due to protein. So this $1.87 protein is our low for the year. Now this does look like this coming up a little bit with cheese prices coming up, but I'm going to question that just a little bit. And again, remember, protein prices are always going to come up when fat prices go down because there is a fat component in cheese. Our high was a year ago at 392. But if we compare back to a year ago, you are higher, 314 a year ago, 316 this year. So again, these protein percentages are coming up, but not quite as fast as what fat does. It's much harder to change protein. Other solids increased in price, but decreased in percentages. We went from a 5.79 to 5.77. I'm going to kind of claim that's rounding error because other solids don't change very much. But the price went from 29 cents a pound up to almost 31. So that added about 9 cents to the milk check. So again, here are our prices for other solids. We had our high back here in January at 54. We're at 29 cents now. These tend to be coming up a little bit. They're driven purely by whey, and whey's in a 58 to 60 cent trading range. PPD significantly increased. That was 55 cents last month, $2.35. So again, a significant increase in PPD. And so the question that we always have to ask is, why did PPD increase? Well, let's remember that PPD is calculated as the total milk price minus class 3. So whenever class 3 decreases, PPD is going to go up. And a lot of people like to see a higher PPD, but that actually probably means that milk prices are coming down a little bit. And so what happened this last month, class 3 came down $1.50. So that's why that PPD went up so much. The rest of the milk check actually increased with the different classes. So again, class 3 came down and most of the other ones increased. The other thing that will change PPD is depooling. So whenever there's more than 75-cent difference between 3 and 4, you're going to expect to be depooling. And that's going to lower the PPD because it removes the higher value from the pool. So for example, we're depooling class 4 at $18.89, but we're putting everything else back into the pool. So that probably decreased the PPD a little bit. So if we look at class 3 that was not depooled, let's call your capacity right around 24 million pounds a day. We processed 23.4, so very close to overall capacity. But your capacity for class 4 is around 10 million pounds a day. We only processed 5.6 into the pool. So I would say about half of the class 4 was actually depooled. Now, if your cooperative was one that depooled, you'll receive a separate check for that depooling. And if your cooperative did not depool, well, you're kind of out of luck. That's one of the reasons I don't like depooling, because there are always winners and losers. So let's kind of turn to, what's going to impact your milk check into the future. So right now, class 3 is higher than class 4 for, the next 2 or 3 months, but overall class 4 is going to be higher. Now this always leads to a problem, since we've got class 1 as the higher of these two. Should you be protecting class 4 or class 3 into the future? And overall, that's kind of a tough call right now. From September to about March, there should be no depooling because those differences are all within 75 cents. And the other problem is whenever these differences are very small, that says using the higher of is actually a bad deal compared to the average plus 74 cents. So I would say for the next year, it looks like moving the new federal milk marketing rules to the higher of as opposed to average plus 74 was a bad deal. So I pulled together my gauge overall outlook of the dairy industry. I'm still at -7. I've been fairly negative here, and given the market today with class 3 down 30 to 40 cents, I think some of the stuff that I've been watching is going to play out here. So we're more bearish because we got more cheese, more cows. We'd be bullish if we started seeing some of these things on the right impacting milk price, but we're not at this point. One of the graphs I started pulling together is this is a cumulative change for the next 12 months of contracts. And what I wanted to see out of this is, are we increasing or decreasing milk prices, and when did the highs occur? So it looks like back in September of 24, we were increasing, then we began coming down. We hit a low point in April of this year, kind of came up, and now we're headed back down a little bit. Now this is suggesting we're trending up, but I think this is actually going to be trending down. So why am I so negative? Well, first off, it's cow numbers. These cow numbers have really began exploding. We're at 9,469,000 compared to a year ago at 9,323,000. That's 140,000 more cows. And from this little blip here, which is we've been in expansion mode here for 6 months, we've added 114,000 cows. I think this is going to continue going up, even though we got poor replacements. I hope we don't hit 9.5, but I'm not going to rule that out at the moment. And the big issue is the slaughter rate. So our last data is for July the 20th, 51,000. Basically, we're still culling less than we did a year ago. We can put this into a cull rate just by looking at the number of cows. And actually, this is based on 9,474,000. I've already put in a 5,000 cow increase this next month. And my argument is anytime we're below this 30%, we're going to be adding cows. This is when we're significantly adding cows. Anytime we're above 30%, we're probably shrinking the herd. And so right now we're around 28%, and I think we're going to just continue adding 5,000 to 7,000 cows a month here until this cull rate pops up above that 30. If we look at milk per cow, the last data that we have is for June. You know, we've been on this upward trend. We're off of that a little bit. But we can't deny that June was the highest June we've ever had for milk per cow. So again, that's going to be a record. We look at fat percentages, kind of the same thing. We've been on this upward trend. This is the highest June we've ever had. So more milk, more fat, just continuing to pump out these components. And daily production, which is combining milk per cow and cows. So this has been on an upward trend, but again, June was the highest that we've ever had. So another record set in June for overall milk production on a daily basis. So what's that doing to cheese? Same sort of thing. June was the highest cheese production we've ever had for a June, and so we've set another record for that. In my weekly podcast, I have been kind of arguing that this expansion of cows, as well as the expansion of all of this processing capacity, could very well end up in a race to the bottom on prices. And so we've had some significant capacity changes, you know, like the Hilmar one in Dodge City, I think is pretty well online. We're getting a lot of panhandle cheese onto the spot market right now. You know, and we've got some significant expansions. Now, the ones that I get kind of excited about, you know, are like the Fairlife ones, because that doesn't go into cold storage or go into the spot market. So, and then we've also got Walmart, but what they're going to do is probably displace milk coming from other Class 1 factories. The other thing that's going to impact your prices is what's happening with disappearance. And so this is my rolling disappearance, where blue is the disappearance and the blue is the production of cheese. For the last year, we've got about 39,380,000 for the rolling disappearance. In June, we produced 40,141,000, so we're producing more cheese than is disappearing. But the big issue is that increase in disappearance here for about the last 18 months is all exports. If you look at domestic demand, it's, I think, fairly flat. And so we're living on a situation where if we don't keep these exports going, we're going to have a significant drop in milk prices. So let's look at exports. These have not been doing anything spectacular. We had kind of a run up in May, and then we've been pretty well down since then, you know, plus or minus 1%. So the last data was for the 5th of August, and right now butter on global dairy trade is 320. Our butter's 231, and today more like 225. We should be exporting a tremendous amount of butter. We do a little. I'll show you that in a second. Cheddar's at 208. Spot market's at 180. That's too close. We can't export cheese at a 20-cent difference. And non-fat dry milk is $1.36. We're $1.25. That's also fairly close. So if the spot market stays up for non-fat dry milk supporting class 4, that's probably domestic demand. And part of what we see is that the cheese plants are using some skim to actually blend out some of the fat that they have, and can make more cheese per pound of class 3. So here are our exports. We actually increased cheese exports a little bit, and all of the cheese we exported was $2.18. We exported cheese to Mexico a little bit more at $2.20, but one of the things that kind of bothers me is we exported about 39 million pounds of cheddar, and that was at $1.92 in June. If you assume it's 30 cents to get it offshore, that's $1.60, and that's basically where we had some of the spot market back here in early July. Different, we have increased, as I was hoping we were, up to 7.63 off of 5.5 in May, and we're exporting at $2.83, but the butter going to Mexico was $2.63, so much less. And this is the cheese exports per day. Basically, what I think has happened is for the last 18 months, we've just had a yo-yo market basically on these exports. We've got a record high cheese exports, but that's not a significant amount of our cheese production. In the fact it's like 9%. It's not up in the 10, 20, 30% range. Finish up with kind of the big thing that impacts your farm is going to be the price of grains. You probably saw the WASDE report. It was really negative for corn, so corn is coming down, and very positive for beans, and so beans are headed up at this point. Looks like there's just a tremendous crop of corn. I was talking to a friend in Iowa that just come back from looking at the fields, and they said it was just an amazing amount of yield out there. We're talking about a 188.8, I think, as a overall yield. The P index is still under 2, so very profitable from a crop perspective, grain perspective, to be making milk. And again, our overall milk prices have been dropping here a little bit. Weather always plays a big piece. So here's the drought monitor. A little bit of dryness around that diagonal line coming up to the thumb of Michigan. Overall, most of the drought is going to be west of the Rockies, more or less. We've got a little bit here in the northeast where I am, but otherwise it's fairly spotty. And if we look at this low that's going to come across the Great Lakes, it looks like it might actually fill in that a little bit with some rain. This hurricane looks like it's going to just kind of skirt through. I thought the other day it was looking like it was going to hit South Carolina, but looks like it might actually veer off and miss the coast, but we'll put a big question mark as to what's going to happen with Aaron here. And basically, Bermuda High is going to push that around a little bit. All right, so that's what I've got. Again, let me know if this format is a little bit better. I'm not going to spend as much time talking about overall prices in the future, because every time I turn around, the market's up or down 60 cents, and that gets a little frustrating when you're trying to figure things out. All right, we'll get you another report next month at about the same time, as soon as your statistical uniform prices come out.